Here's something that probably happened to you. You got your first paycheck, deposited it in a savings account, earning 0.01% interest, and then watched inflation eat 3% of its value every year. Meanwhile, someone your age invested that same money in the stock market and watched it grow 10% annually. By age 65, they'll have roughly 60,000 more than you. That's not luck. That's the power of starting early. Today, I'm showing you exactly how to stop leaving money on the table. Let's start with the most basic question. What actually is a stock? A stock is a tiny piece of ownership in a company. When you buy one share of Apple, you literally own a fraction of Apple. The company decides to sell these pieces to raise money for expansion, research, or paying off debt. You buy the piece hoping the company grows, which makes your piece more valuable. It's that simple. You're not betting on whether the stock goes up or down. You're betting on whether the company itself will be worth more in the future. So how does the stock market actually work? There's no physical building where stocks are traded anymore. Instead, the market is a massive digital network where buyers and sellers are matched instantly. The New York Stock Exchange handles about 1 billion shares traded per day. When you want to buy Apple stock, your order goes into this system, and within milliseconds, it's matched with someone willing to sell at that price. The stock price you see constantly changing reflects real people, making real decisions about what they think a company is worth right now. Here's the critical distinction most beginners miss. Investing is not gambling. Gambling is betting on something completely random with no intrinsic value. Investing is betting on real companies with real products, real customers, and real profit potential. When you invest in the stock market long term, you're betting on human progress. Over the past 100 years, the U.S. stock market has returned an average of 10% annually. That means every dollar invested in 1924 became tools by tour. Even during the Great Depression and 2008 financial crisis, investors who stayed the course came out ahead. Now let's get to what you actually came here for. How do you start? Step 1. Open a brokerage account. This is where you'll buy and sell stocks. Popular options for beginners are Fidelity, Charles Schwab, or Vanguard. The entire process takes 15 minutes online. Step 2. Fund your account with real money. You can start with $100 if you want, though most experts recommend at least $500 to make it worthwhile. Step 3. Choose what to buy. Most beginners should start with index funds, not individual stocks. An index fund is basically a basket containing hundreds or thousands of stocks, giving you instant diversification. Let me give you specific numbers to make this real. Say you're 25 years old, and you invest $5,000 today in a simple S&P 500 index fund. You do nothing else. Just let it sit. At a historical 10% average annual return, that $5,000 becomes $160,000 by the time you're 60. If you invest $5,000 every single year for 40 years, you'll have contributed $200,000 total. But you'll have $2.8 million. That's the magic of compound interest. Einstein called it the eighth wonder of the world. Starting at 30 instead of 20 cuts your final number roughly in half. 3 beginner mistakes will cost you everything. First, trying to pick individual stocks like you're Warren Buffett when you should be in index funds. Second, checking your portfolio every single day and panic selling during downturns. The stock market drops 10 roughly every 2 years. That's normal, not a signal to abandon ship. Third, trying to time the market. Investors who stayed fully invested through every crash since 1975 earned 10% annually. Those who tried to time the market and missed just the 10 best days earned 2% annually. Being invested beats being smart. The uncomfortable truth is that wealth isn't built through salary, it's built through ownership. When you work a job, you trade time for money. When you invest, your money works for you while you sleep. Every single wealthy person you know got that way partly through owning pieces of growing companies. This isn't a get-rich-quick scheme. This is a get-rich-slowly scheme that actually works. Open that brokerage account today. Make your first investment this week. Your 65-year-old self will thank you. If this video helped you finally understand the stock market, please like and subscribe for more strategies that actually move the needle on your wealth.